Welcome to the high-stakes world of restaurant digital transformation. Picture a restaurant group that's growing fast. More locations, more menu items, more vendors, more chaos. Leadership wants real-time visibility into prime costs and seamless integration across their operations. So they choose a modern cloud-based platform like Restaurant365, promising to revolutionize operations with real-time insights and scalable reporting. It sounds like a dream, right? But here's the uncomfortable truth. While the software itself is industry leading, a shocking number of implementations fail to deliver ROI. Why? It all comes down to one dangerous myth: the plug and play fallacy. Operators mistakenly believe these complex enterprise resource planning tools work right out of the box, so they rush the setup and unknowingly migrate dirty data, legacy charts of accounts, unmapped POS categories, messy vendor lists. The immediate result? Complete analytical paralysis. In this video, we'll explore why taking shortcuts here sabotages your financial future, and more importantly, how clean data has become the strategic prerequisite for AI readiness in 2026. This isn't just about fixing accounting errors, it's about building a foundation that will either launch you into the future or chain you to the past. Here's the million-dollar research question. If modern restaurant ERP platforms are so capable, why do so many of these comprehensive implementations fail to deliver on their promised return on investment? The answer rarely lies with the software itself. Rather, it stems from a dangerous industry illusion. The breakdown comes from a belief that complex systems work like a new phone. Sign in, sync, and everything magically improves. In restaurants, that plug-and-play mindset is dangerous. Because the ERP doesn't create clean data, it only amplifies whatever you feed it. Through the lens of an experienced controller, we've identified 7 critical mistakes that transform promising implementations into expensive nightmares. When sales categories aren't mapped, revenue falls into suspense buckets. When inventory items have inconsistent units, theoretical cost becomes fiction. When vendor records are duplicated, paying bills becomes a minefield. The accounting team ends up spending roughly 30 hours a month chasing classifications and reconciling chaos. Exactly the busy work the ERP was supposed to eliminate. And here's what makes this truly urgent. These mistakes don't just hurt your current profitability, they completely cripple your ability to adopt AI and machine learning tools. Because predictive scheduling, automated purchasing, and demand forecasting, they all rely entirely on the integrity of your historical data. If the past is wrong, predictions are wrong. A flawed foundation means algorithms that fail before they even start. The gap this research highlights is simple but devastating. Most implementations focus on turning features on instead of building a trustworthy data system. Think of your operation as a pipeline. Sales flow from the POS into a daily summary, then into the general ledger. Inventory and recipes translate sales into ingredient depletion. Accounts payable turns vendor invoices into true cost. Then consolidated reporting rolls it all up across locations. And finally, AI tools try to learn patterns from that history. Now here's where existing approaches completely miss the mark. Traditional, rushed setups leave cracks all along that pipeline. A massive operational gap is created when restaurants rely on generic or legacy financial structures. Think about a standard chart of accounts ported directly from an old system. It's often flat, clustered, and full of ad hoc adjustments. When every point of sale transaction or vendor invoice is routed through this broken framework, the data becomes instantly corrupted. Add a multi-location restaurant group into the mix, and the poor structure magnifies the chaos. Without distinct tracking for specific costs like draft beer versus bottled beer, or front-of-house hourly labor versus salaried management, the reports become totally untrustworthy. Then the human layer makes it worse. Training happens once, turnover happens forever, and reconciliations happen too late. When you migrate dirty data, you're essentially building your financial house on a foundation of sand. And in 2026, these cracks don't just hamper today's reporting, they completely limit tomorrow's innovation. So how do we fix this crumbling foundation? To close the gap, the research proposes a mindset shift. Treat implementation like building financial infrastructure, not installing an app. The controller's blueprint is a novel, highly disciplined methodology focused on rigorous data architecture. First, instead of migrating a legacy mess, you design a clean chart of accounts, a deeply hierarchical system with parent and child accounts rolling up perfectly from store level to regional to enterprise. Think of your COA not as a simple list, but as the architectural blueprint for your entire financial reporting structure. And you get specific. COGS isn't one giant bucket, separate accounts for food, draft beer, bottled beer, wine, and liquor. Labor must split into salaried management, hourly front of house, and hourly back of house. This hierarchical structure is what transforms your data from unreliable noise into actionable intelligence. Next, you make revenue trustworthy at the source by integrating rules-based mapping at the point of sale, routing every specific menu item to its exact ledger account automatically. That means mapping every POS category and tender type, so when the menu changes, the accounting doesn't break. Then, the real game changer. Harmonizing operations by adopting the 13-period 445 fiscal calendar. Every period contains identical weekdays and weekends, enabling true apples-to-apples comparisons. And you enforce a strict hard close at period end. Once a period ends, it must be locked. No more retroactive tampering, just pure, unalterable data streams. On the cost side, you connect standardized recipes directly to the inventory system, so the depletion of ingredients is automated in real time with every sale. You fix units of measure, so your system knows that a 50-pound case of beef corresponds to 6-ounce steaks. One ingredient purchased, stored, and portioned without duplicate items. Finally, you clean accounts payable with meticulous vendor merging and robust master data governance. Then reinforce everything with training, written SOPs, and daily to weekly review rhythms. And crucially, you roll this out in phases. Pilot, learn, then scale, so you don't bet the whole business on a single big bang weekend. And what are the results of this meticulous setup? When the foundation is built correctly, the changes show up fast, and they show up everywhere. The breakthroughs are found in capturing exact, airtight prime costs. First, reporting becomes believable. With a structured chart of accounts and consistent store-level standards, consolidation stops being an art project. You can compare apples to apples across locations, food cost categories, labor buckets, controllable expenses, without reclassifying half the month. From a controller's perspective, spending weeks to architect this correctly saves thousands of hours of manual manipulation for years to come. Second, the daily sales feed stops creating accounting debt. When POS items, discounts, taxes, and tenders are fully mapped and rules-based mapping is in place, new menu items don't fall into unclassified. Revenue leaks are plugged. The team stops spending dozens of hours each month investigating mystery revenue. Third, inventory and recipe integration starts paying for itself immediately. By linking standardized recipes directly to the inventory system, the depletion of ingredients is automated in real time with every sale. The ultimate magic trick here is perfecting the actual versus theoretical food cost analysis. When you combine unified units of measure and clean up your vendor database to eliminate duplicates, the variance report goes from being a worthless guess to an incredibly sharp diagnostic tool, precisely exposing every ounce of waste and theft. That variance points directly to profit leaks, overportioning, waste, theft, unrecorded comps, receiving errors. And because fiscal periods are aligned and hard-closed, you're not debating which week a problem happened. You're fixing it while it's still fixable. Finally, this clean history becomes usable for forecasting. Instead of AI learning from noise, it learns from signal. When your AVT variance is accurate, you can finally see where profit is leaking and plug those holes immediately. Here's the truth that no software vendor will tell you. Technology is only half the equation. A perfect system is nothing without the people running it. The human element determines success or failure. When there is high staff turnover, and in restaurants, it's inevitable, treating training as a one-time event is a death sentence for data quality. When experienced employees leave without documented processes, their knowledge walks out the door. The solution? Consistent process documentation. Standard operating procedures for every data entry touchpoint, from receiving deliveries to end-of-day counts. But documentation alone isn't enough. Technology alone isn't going to save your margins. Operational discipline is the bridge. Management must review data quality daily, not just at month end. When managers trace discrepancies back to the source and provide immediate feedback, data accuracy becomes a point of professional pride. Daily reconciliations, weekly inventory variance reviews, period end audits, these catch errors while they're still fixable. And here's the key: department head buy in. When kitchen managers see AV-T variance as a reflection of their team's performance, when front of house managers understand how tip errors affect payroll, the system becomes relevant. Kitchen managers finally trust the variance reports. Staff who understand why their inputs matter take greater care. The ERP transforms from administrative burden into the operational heartbeat of your venue, a shared, empowering operational tool. This is how you bridge the gap between system potential and real-world results. This future-proofs your entire operation, shifting you from month-end panic to daily micro-reconciliations. Now let's look toward the horizon, 2026 and beyond. Clean data isn't just about better reporting, it's the essential fuel for a massive paradigm shift, the integration of artificial intelligence and machine learning tools that will define industry leaders. By 2026, clean data isn't just nice to have, it's the price of admission for AI-driven scheduling, forecasting, and automated purchasing. Strategic data governance unifies fragmented POS, CRM, and supply chain data into a single source of truth. Without this foundation, AI-driven competitor analysis and demand forecasting produce flawed insights. But here is the critical warning: garbage in, garbage out. If your foundational data is flawed, AI will only automate your mistakes faster. A flawed implementation doesn't just hurt your current profitability, it limits your ability to adopt AI before competitors do. But with clean, unified data, the transformation is revolutionary. When your historical data is precise, AI algorithms can perform miracles. AI accurately anticipates staffing needs by correlating sales with weather and local events. Automated purchasing minimizes waste while ensuring availability. Intelligent scheduling becomes a profit-driving strategy, not a reactive chore. Dynamic pricing and personalized marketing optimize revenue. Early warnings on supply chain disruption protect margins. This is where the resolution of the research becomes clear. A successful restaurant ERP isn't just where transactions land, it becomes how the business runs. In the old world, accounting was retrospective. Wait for the month to end, scramble to close, discover problems after the money is already gone. In the new world, the system supports daily operational control. But beware the Big Bang approach. Simultaneous deployment across all functions creates chaos and resistance. The winning strategy is phased rollout. Start with data cleansing, pilot in controlled environments, test, learn, refine, then scale. This transforms your ERP from a retrospective ledger into a predictive strategic asset, an unmatched predictive engine. You're no longer just balancing books. You're actively shaping your future with operational excellence that creates true competitive resilience. Let's bring this home with one practical conclusion. Profitability and AI readiness don't start with automation. They start with data you can trust. The 7 critical mistakes we've explored, from dirty charts of accounts to neglected training, aren't just technical oversights or glitches. They represent costly governance failures that cost operators millions in waste, labor overages, and administrative inefficiency. Failed ERP ROI usually isn't a software problem. It's a foundation problem. Dirty account structures, unmapped POS details, inconsistent fiscal periods, broken inventory math, duplicated vendors, and human processes that degrade over time. Your implementation must be viewed as a capital investment, not a checklist item. The fix is clear, and it's very controller-friendly. The rigorous work of defining units of measure, merging vendors, enforcing fiscal calendars, and architecting a restaurant-specific chart of accounts creates a single source of truth that your entire operation can rely on. When staff are trained and engaged, when you enforce strict standard operating procedures and daily reconciliations, the ERP becomes your operational heartbeat, shifting you from month-end panic to daily micro-reconciliations. Looking ahead, AI and machine learning adoption depends entirely on data quality. Clean sales by channel plus consistent fiscal periods feeds demand forecasting. Accurate inventory levels plus vendor lead times enables automated purchasing that reduces stockouts and waste. Reliable labor punches plus sales patterns enables AI-assisted scheduling. But the implication cuts both ways. If the foundation is messy, automation accelerates the wrong decisions. So here's your call to action. Treat data integrity as your strategic imperative. Pick one foundation area this week: COA, POS mapping, UOM, vendors, or closed discipline, and run a mini audit. Clean your data, map your systems, train your people, and build the infrastructure to compete in an AI driven future. Because in 2026, your data isn't just a record of what happened, it's the foundation for everything that will happen next. Your profitability, your competitiveness, your very future, it's all written in the quality of your data. Start building that foundation today. Like and subscribe for more helpful video like this, and connect with the experienced accounting professionals your restaurant needs. Details in description below.